We'll do it live.
We
Dun
are
dun
live.
dun.
All right.
Oh, it
Yo,
says
Andrew,
live.
are you gonna tweet a link?
Am I gonna?
Because I can just retweet it.
Yes.
I think we're live now.
This will make for a great live recording. I'm like, okay, so we're live. Now what do we do? All right, let me
I
tweet.
think if there's people watching, they can hear us now.
It should say on the bottom corner how many viewers.
I don't have that.
All right, I'm gonna
Maybe
go on
nobody will
Google
show
Plus.
up.
We're live. To participate. All right. Let me tweet this.
Look, I got a question. It says my gross income last year was over 100K.
Oh,
Should
there
I
it
create
is.
an IRA, traditional, SEP, or simple in order to reduce my tax burden? I worked full time in a part-time job and also had 1099 income. I'm confused whether I can deduct anything from it. From Terry Saint Amour.
So I have a
So,
few questions
Andrew, we
from
good?
email and stuff. So you got stuff in the Q&A app already?
There's a question there already, yeah.
Oh wow, badass.
And man, it's a good question because I don't know the answer to it.
That's you, Johnny.
Don't know if we're starting yet.
Tweeting. I mean, it is 8:35 for you guys. 4.
So there are people watching us. We're not just by ourselves fumbling. So welcome
Fumble
everyone.
more.
Yeah, seriously. We're just kind of getting this all fired up. I want to pull some questions from emails as well.
All right. Well, while you do that, I guess I'll be the showman here. To anybody here, and I'll probably say this again. Andrew, you're gonna have to tell me how many people we have watching because it does not tell me.
We have 13.
Oh, cool.
Yeah.
Well, hello to 13 people to the first ever Listen Money Matters webinar. We've got our beers. At least I do. Do you have your beer, Andrew?
Oh, I do. I have
Yeah,
a
have a good one.
Dominion Oak Barrel Stout.
Mm,
Ooh.
I do love stouts. I got my third shift amber lager. It's very crisp and smooth. Nothing too special.
Thank you, Terry, for letting us know you could actually see us, because we
Yes.
almost... Well, actually, we totally have no idea what the fuck we're doing.
Yes. We know things. No, we totally practiced a lot before this.
We did. It took us 2 hours just to get Johnny into the webinar with us.
That's true. Welcome to technology. It's actually a wonder that all this works. It's insane. Anyway, today we're going to be answering, well, mainly tax questions. I know Johnny's going to help out with that. And then if you've got other questions, we can take them. Andrew will answer some. I'll answer some. But I think, Johnny, you're mainly in the spotlight tonight because you know things about taxes, and I know very fewer things about taxes.
I know. I listened to This Financial Life Part 2 today, and I can tell. Hopefully, we'll help you out a little bit, so your accountant doesn't pull his hair out when he meets with you later on this year.
Oh, I think we'll be fine. I was supposed to meet with him today, actually, and then he called and he was like, "I can't get out of my driveway," so because we are buried in a lot of snow right now, so I have to go see him on Thursday instead. But I think it'll be all right. I got all my documents printed and
okay.
everything. I don't know. He didn't yell at me too much last year.
Yeah. So, I mean, you're a very habitual type of guy, so I'm pretty sure it's all the I's are dotted and the T's are crossed just fine.
Hopefully, we will see.
All right, so we have 18 people in here. Let's like start getting into it.
All right.
Well, actually, now we have 17 people, so someone
Okay.
got bored.
One person was just like, "No."
All right, so Johnny, we were getting started. We were trying to figure this out, and you told me like we're gonna talk about a 1040 form, and I was like, that's fucking awesome because I'm not even really sure what that is. And I was like, is that the thing that I got in the mail from all of these companies? And then you said,
Yeah, so right before we went on the air, Andrew was like, a 1040, that's what everybody thinks is a W-2 is. So he's absolutely crazy, does not know anything. So I'll kind of take it from here. So going forward, this whole thing was kind of, hey, grab your 1040 and we'll kind of walk you through it. So that's what kind of we're gonna do. Here, so hopefully everybody has either their 1040 from last year, their 1040 from this year that they've already filed, or something to kind of follow along with, a blank one that I know some people put in the links there. So going forward, let's kind of go through it. And as we go through this, Andrew will chime in, Thomas will chime in a little bit, just like a regular show. And then there's also the Q&A app there. Go ahead and put your questions there. Terry, I do see your question. We will get to that, I promise you. And thank you for letting us know that you can actually see us.
And hear us, yeah.
Yeah, and hear us. So definitely. All right. So going forward, we're gonna skip. Go ahead, all the personal information, your name, your social, all that stuff. But just know that the IRS double checks your social as well as your children's social in a database. So if you put fat finger, go through, especially if you e-file. Okay, so moving to like the second portion of it, there's a filing status. And there's a whole bunch of questions on just what my filing status is. So there's a few of them to choose from: single, married filing jointly, married filing separately, head of household, and qualifying widower. So going through them real quick: single, we know you're just a single guy, or girl, no dependents, nothing, not
Johnny,
married.
I have to say, like, when I was single and I just gotten my first job, I was like, I'm single, but I'm also head of my own household. So I just wrote that in. Like, what's the difference? Like, is that like incorrect? Am I paying more taxes because I'm head of household, or I have no idea.
So single is you're just one person, care of the definition of single. Okay. Head of household is whether you have, so you're a single person, but you have dependents. Basically, you're not married with some sort of dependents. Children,
died and they're next to the interstate exit.
I'm on a webinar.
parents you might take care of,
Can you do
something
it?
like that.
Flicker it out, maybe.
Okay.
I don't know how to use jumper.
Yo, mute
The
yourself,
better way to do it, if you have
Thomas.
dependents,
Oh, Martin.
yeah,
Sorry.
the head of household way is the way to go. There's better tax benefits there than if you're single. However, not as much as if you're married filing jointly. So you might be single with your head of household, but for tax purposes, you're probably just single. Does that make sense to you, Andrew?
I think that makes sense. Yeah, but it's not like I'm
Maybe.
going to be penalized, is I guess what you're saying. If I'm single but I choose head of household, like it's going to even out.
No, you have to qualify based on some tests in order to be head of household. And one of those main tests is you have to have
You
a
need
dependent.
tables?
I have.
So you
Okay.
can't have you can't be single and not have a dependent. Or I'm sorry, you can't be single, yeah, and you won't have a dependent.
So if I check that off on a forum and I send it in, I mean, what happens? Like I reconcile that when I do my taxes later. Is that because there's no one there that's like, no, Andrew, like you can't check that. Like no one says that. Like you just kind of do it and it just goes.
Well, if you, TurboTax should be smart enough. If you put head of household in there without a dependent, then it's gonna not let it go through. So I mean, the system, there's checks and balances within encoded in the software that it won't let it go through because it's just
I got
not
you.
right. Yeah.
Hello?
So the married filing separately is you're married and you file separately. You know. And there's also the legal definition of marriage here that really gets into play, because if you're married, then you're married, so you pretty much have to pick. Unless you're could be legally divorced, is when you'd either be single or head of household if you have children. And then qualifying widower, if you had a spouse die within the past 2 years, you can be considered a qualifying widow or widower. So going further down, you have your exemptions. The exemptions are pretty much the amount of people that you're going to be claiming on your taxes. So if that's going to be your spouse or your children or a grandparent, a parent, something like that, then that's going to be there. So, and then we're going to move into the income section, and I kind of don't want to hear myself talk the whole time. You guys got anything?
Yeah. I mean, I'm listening because if I have questions, I will totally interrupt you. I want to hear how much you make, so tell us.
You think we're going to go over mine? Yeah, this is
Yeah.
not this. This
Just
is not
use
this
as an
financial
example,
life.
John.
Yeah, as an example. So, okay. Yeah, going. I didn't know we were doing that, but okay. So in the income section, right? I didn't use mine personally because that's probably for another show, and we use this financial life. Also, and if you know one of the other episodes I did, you can know what I do for a living, and that's all public knowledge anyway, so you can really find that out. So, okay. So the income section. So let's say in box 7, for instance, you make whatever your job is. So we'll say 35,000. That's gonna be straight from your W-2 or a combination of yours and your spouse's W-2s. Okay. And then we have taxable interest is the interest that comes off of a savings account, CDs, any sort of taxable interest. Andrew, somebody asked a question about Lending Club, right? You got Lending Club.
Right. Yeah. And we actually talked about it because I think it was the form's like an OID form or something. Does that make sense?
Yeah. So an original issue document, 1099 original issue document, and I can't remember who asked the question, but I got an email from Andrew to talk about this on the webinar. So Lending Club, for all of you people that have Lending Club, they're going to issue you, or they have already issued you. It's called a 1099 original issue document, OID. And basically what that says is all the interest that you've made off of those notes that you own, it's taxable interest. So it's not. Somebody asked if it was capital gains. Somebody asked if it was capital losses. I mean, it's not. It's taxable interest.
Do you have the question in front of me? Because I feel like they asked the question, and when we were talking, you were kind of like, "Whoa!" Like they completely don't understand how it works, and I definitely don't understand how it works. I just fill the forms out and pay them whatever TurboTax tells me or whatever. But I feel like they over anticipated how much taxes they would get charged, or I mean, can you maybe describe like how you would pay taxes on it, like how it falls into the bigger picture?
Okay, I got it right here. So I don't know where the question came from because you just forwarded to me an email, but the question is, it is each payment you could it would be a short-term capital gain until the end, and then it would be transferred into a long-term capital gain. Well, that's why I was like, okay, well, I don't really know if this person knows how the whole thing works. Because Lending Club, you buy a note and you earn interest. So instead of them paying the bank interest on the loan, they're paying you interest. So just like you would own a savings account, it's just a higher rate of interest. So looking at your 1040, it's taxable interest. So it's just added to your income.
So the interest
on
the note would be not that much different than like savings account interest. Is that what you're saying?
Exactly.
It's the same.
It's treated exactly the same. Yep. And so, but going one step further, so I was in Lending Club in 2014, and then I kind of got bored of it, didn't really like it, so I sold all my notes on the exchange that they got within Lending Club. And so each one of those sales that I made is now a capital gain or a loss. And so if I held the notes for longer than a year, it was a long-term capital gain. And then if I held it if I held it for less than a year, it was a short-term capital gain. So the capital gains there is what he was talking about if you sell the notes. But simply keeping the notes and not getting rid of them is just simple interest. So that's kind of how that worked there. Going forward, I guess if we're done with that, then I mean there's ordinary dividends, qualified dividends, business income, all the different aspects to income there that we have to go through.
So there's a question. So business income. Do I have to have a business entity, or if I just like had a side hustle, it was like, sole proprietorship, I just mowed somebody's lawn, made $500 over the year, would that go there?
So if you were gonna deduct losses, I mean, so if you were gonna deduct some expenses, like you had to buy gas and you had to buy oil, and it would go in block. What is this here? Block 12 of your 1040, because now your income is really what's offset by the losses that you have, or the deductions that you have.
No, I was saying like if I made money, like if I had a side thing, I made like 500 extra bucks over the year, but it wasn't like under an LLC or anything like that, would it still go into business income?
So we're going to tell people the legal way to do it, and if you by any income for all sources derived. So in that situation, if you're just a guy that, hey, I'm going to cut your grass, and some guy pays you $500 in cash for the whole year or whatever, it's probably going to go in block 21. That's other income. It's not going to go so much in the business income, because those business income is going to come off of your Schedule C.
So
at what point do I have to fill out a Schedule C? Like, is it an income level, a certain dollar amount I hit, or like a structure of a business that I'm doing?
I guess it really depends on whether or not you are going to classify yourself as a business, or if it's just a hobby or some sort of side, income thing. I mean, because I guess that's where the lawyers get involved. Are you a business or are you not a business? Then
Gotcha.
That'd be the definition.
And just to be clear, you're going to go over the legal way to do it, but if people wanted to find out the illegal way to do it, where would they go to find this out?
Well, just call my friend Lenny. Number is 911.
I'm pretty sure you got some friends out there in New Jersey, right? That kind of run that sort
in
of
New Jersey, we all do our shit illegally. It's kind of like
Andrew, when we go have dinner next Monday, just don't take me to the shady part of town.
Yeah, dude, we're not paying for that dinner. We're gonna slowly leave and just like.
You guys get to have dinner? Oh, I'm jealous.
I'm taking Johnny out to dinner, yeah.
Though I am coming in a month, so.
That's true. I will take you out to dinner.
Nice. I'll take you out to dinner. It's gonna be cute.
Nice. Yeah. you better buy me flowers, man.
So,
right.
let me answer Terry's question, since he's the only one that we have right now, and nobody else has asked a question.
Oh, dude, I see tons of questions.
We have a ton of questions.
Really? Oh, holy shit! We
got a bunch.
Let's go answer Terry's question, and maybe we'll just go down the list, because there's a lot. Yeah.
Also, just as a reminder to people, if you guys see a question you like, I think you can hit +1 on it and kind of vote the best questions up. I don't think we can do that, but I think guests can do it.
Yeah, I try to +1 them, but I can't.
Yeah, we can't do it, but I believe that people who are not moderators can do it, and it sort of tells us which questions most people want to hear.
Because I will say
try to get to the ones that we see here.
I super appreciate Allison Carroll's support, but her question that says, "I see 3 guys and 1 cat." I think we could probably skip answering that.
The cat.
Maybe for the second webinar we can cover that.
Okay, so Terry said, and my feed froze, so that's why I said I only have 1 question. So you guys are gonna have to read them to me, which is cool. So it says, if my gross income for last year was over 100K, can I create an IRA traditional, SEP, or simple in order to reduce my tax burden? I work full time and a part time, and I also had 1099 income. I'm confused to whether I can deduct anything from it. Okay, so I don't know how much over 100K. That's a big number. I mean, it could be $1 million, it could be 101,000. So
let's assume it's 115.
115. Okay, what are we going to assume? Are we going to assume Terry's married or not?
Let's do
screaming at the thing right now. I'm like, no.
Okay. Let's talk like she's not married, and then maybe we'll touch upon how it might change if she is married.
Okay. So if she is single, then she can't have a traditional IRA because it phases out at 70,000. If she's an active participant in her company's 401k. So I guess it all depends. So now we have to make another assumption. Is she an active participant in her company's 401k?
What does that mean? What does that mean?
That means you actually give money, and you are an active participant in your company's 401k or whatever they offer there.
I see what you mean. Okay, so it's not like you're an owner of the company. It's like an active participant means just like you're actively contributing to the 401k.
Yes.
Hmm.
So and then different types of 401ks have different definitions of what is an active person. So we'll say over 100K, 150, then it's no, she cannot have a traditional IRA. And then SEPs and simples will say if she owns a business, then there's a possibility there, but she don't have anything that can own a business. So, but let's say she was married, right? So if she was married, it kind of jumps up. So we'll say maybe the combination is 150K. So she can have a traditional IRA from as long as if she's an active participant, her income doesn't go above 116,000. If she is not an active participant, it can't go over 191. So there's a bunch of little caveats to if you can or if you can't. I mean,
part of the
if it's
trick is
deductible or not.
if you're an active participant, it reduces that number, right? So if I was making 120 and I was an active participant with $5,000 into a 401k, then the new number would be 115, right?
Well, yeah. So I guess it all comes down to what your AGI is when it comes down to. So I mean, but AGI. So right now when we get to the adjustment section of the 1040, the AGI is it takes into account that traditional IRA. So we're talking before pretty much adjustments.
She actually responded. She said a very small amount, less than 115k. So right in the realm that we were.
Yeah. So Terry, I'm sorry, I hate to say, but it kind of it depends, But did she say if she was single or not?
Yeah. Yep, she's single.
Oh, she's single. Then yeah, you're kind of out there. So especially with extra income, extra 1099 stuff.
So what can she do? I mean, she can definitely create an IRA, right?
Well, that's kind of what we're talking about. So if she has a business or a side hustle, I mean, you can, definitely first you want to max out your employer's 401k if they offer it, which I'm really hoping that they do because she makes so much money. So because that'll get it tax advantaged to begin with, and then on top of that, in order to lower her taxable income, I guess it just depends on what her goals are. I mean, do you want to pay taxes now? Or you want to pay taxes later? Because at the end of the day, she's going to pay them.
All right.
And I mean, there's other things too, like HSAs. I don't know if she puts anything into an HSA or what she does for a living, but
I mean, generally speaking, it's good if she's contributing to some of these things to reduce her taxable income. But those are going to be like the major. She said the word like whether I can. She said she's confused if she can deduct anything from it. I mean, those are like the best deductions, quote unquote, that she's going to get, right?
Yeah. So I mean, if she falls within the income ranges based on all her income, all her 1099 income, then it would just lower the amount of gross income that she had. So it would lower her AGI. Therefore, going forward, it would lower her taxable amount.
Cool.
But yeah, so.
All right, let's move to the next one. But Terry, if you think there's maybe more, or we didn't get to the heart of it, just like do a follow up, and we'll add you in there. So moving on. By the way, John, you could see when I add someone's question into that like top thing, right?
I can't. My feed froze, and I don't want to mess with it. So
I'll read you the question.
You have to tell me.
Okay.
Yeah, I'm in. Let's do it.
This one is from Michelle, and she said, I heard you can deduct something with student loans. How/what can you deduct?
Okay, so you can deduct student loan interest. So if you have a student loan and you pay interest on it, it's just the interest. It's not the principal payment. So whoever you have the student loan with will send you a form. It'll tell you how much interest you paid. You can take that, and you can take that as an adjustment. So what that does is you add up all of your gross income, and then you basically subtract the student loan interest up to $2,500 per tax return. So if you have it, and you're married, and your husband or your spouse has it, then you guys add it up together, and it's a $2,500 cap.
$2,500 cap. So if you paid $2,600 in interest, the extra 100 you would not be able to write off, is what you're saying.
You will not be able to take an adjustment, and you won't be able to deduct it correct.
Okay.
And now,
And is that a straight like $2,500 off your AGI, or is it like a percentage of that is deducted?
So it's $2,500 before your AGI. So your gross income, all income from all sources derived, and
and
looks like I better look it up.
there goes our tax expert. So
Student loan interest deduction.
So I got the vibe of what he was saying, and actually I think we should maybe talk like a little bit about what AGI is versus gross. I mean, we talked about that in like a few episodes ago. What was
Which
it?
I guess if people are looking at their 1040 or like the 1040 online anywhere, what line is AGI? Oh, here it is. Yeah, 37 is AGI. So your gross income is just like the same thing as your total income. So anything in the income section, wages, salaries, tips, business income, dividends, IRA distributions, all that kind of stuff. And then you get to take your expenses, your contributions to like simple, I think here, IRA deductions, student loan interest deduction, that's a cool thing. Tuition and fees if you're a college student, which that helped me out when I was a student. And then that's your AGI. So it's really just adding up everything from 7 to 22, which gets your total income, and then from 23 down to 36, that will deduct from total income to get your AGI. So it's kind of like a subtraction thing. It's all like coming back to me, Andrew. I did this stuff by hand when I was like a teenager, and then I discovered TurboTax.
God, dude, but I can't even imagine by hand. I did TurboTax, and last year I got married, I bought a condo, and I changed jobs, and it took me like with TurboTax days. Like, and I would be in the office working on it. Lord, like, are you okay? Can I get you anything? Like, it was too much, dude.
Dude, let me tell you how easy it is to fill out a tax form when you're like 8 or 16. You take your W-2, you put that in there. That's what you pay taxes on. You probably get a refund. One thing I want to say, if you are confused on your taxes and you don't want to pay for TurboTax, look for a program called VITA, like VITA. It's called Volunteer Income Tax Assistance. They usually do it at college campuses, but sometimes at other places. And basically, it's accounting students who need to get like volunteer hours or like work hours towards their Masters of Accounting or whatever it is. They just do your taxes for free. So if you
And these are real people that will go and they'll sit with you or something?
Yeah. So what it is like usually it'll be on a college campus. So it'll be like a bunch of accounting students in a computer lab, and then you line up and you get with one of them, and then they do your taxes for you, and they file it right there. And I did it for 2 years in a row as a student. The only caveat is you have to make, I believe, less than $52K a year to qualify for it. So if you make over that, you're kind of on your own. But if you're under it, there's students out there who will do it for you. So, and I will, let me be useful for a second while Johnny's taking a little hiatus.
I know. I'm like chatting with him, like, and just join back.
Can we like put messages in the chat for people? Is there a way to do that?
I think if we go to chat, I think maybe.
Can people see our chat?
There's actually.
So I can put that there. I don't know if anyone can see it though.
I really think there was. God, we joined this thing to set up the whole thing like maybe 45 minutes ahead of time, and I thought I'm like pretty good at technology, and it took us a while to figure this out. But
yeah, it's kind of weird. Well, anyway, VITA. Just Google it. You'll find the first link is the IRS. There's a place where you can find a site, so that's easy. I think while we're waiting for Johnny, I think there was a question for me somewhere in here. So I can take that real quick. Let me see if I can find it.
Yeah, and if there are other just random money questions I can handle.
Yeah, and also I will say that I definitely deducted student loan interest.
Here we go. All right, so I found your question I put on the top. I'll read it for you. For Thomas, was the money you used from CIG to pay off your loans before graduating pre-tax or post-tax? I'm starting to bring in a bit of money from my blog/business, which I want to put toward my loans, but I'm concerned how to deal with the taxes on that. And that's from our good friend and teammate, Random Patterson.
Oh, hey, Ransom.
Random.
How's it-
Ransom.
You need
Random.
Ransom. Dude, do you think in QWERTY,
Me?
like making a finger typo in your head?
I know, right?
Anyway, it was both. So it's kind of split into two parts because for most of 2012, which is half the time I was seriously paying off student loans, I seriously paid off student loans from October 2012 to March of 2013. And during 2012, most of my income still came from part-time jobs. I didn't do an internship, but I had done enough part-time stuff that I believe most of my taxes were withheld. I think I still had to pay a little bit, but not much. So all the money that I put towards my loans from CIG income was pre-tax. Everything that I put towards it from part-time job income, that had withholding applied to it. So, but to answer your question, the main bulk of what I paid towards my my loans was pre-tax. But since I paid most of it during the first 3 months of 2013, I sort of just shoved everything I had into the loans and basically assumed that I would have enough money at the end of the year to pay it off. Now, at the time, I did not know that you had to do quarterly estimates, and I also did not know how much I had to pay in taxes. I thought that I only had to pay self-employment tax. I have now since learned that I have to pay self-employment tax plus income tax. So, I don't know what your income is going to be, but if you can estimate that and sort of see what your your taxable income is going to be, and then take the percentage of that that's going to be self-employed income and look at your withholding and see if you can predict what you might need to save for taxes. So personally now, I'm getting to the point where I'm like, I need to put about 45% of my income into a tax account the moment I get it, just so it's there. Because all my income's from business. If most of your income is from a part-time job at this point, it might be withheld to the point where you don't need to save a whole ton from your business stuff. If most of your income is coming from side hustles and business stuff, then yeah, you need to start shoving a bit of it into a tax account. Because the taxes are probably going to come due before your loans do, since you're still, I think you're a sophomore, right? So yeah.
Badass. All right.
That's the tough thing about this is, taxes is such a...
It's very specific to the person.
Your situation, if this is your specific, thing that's going on. But yeah, that's what I did. So, and it's what I'm doing now is I am saving money for taxes. It's kind of disheartening because it's I'm going to get paid in March, and basically every dollar of what I got paid in March has to go out in a quarterly. Yay.
That's rough having to plan quarterly and.
Yeah, it is. You don't see it with withholding, so it seems it's I don't know, it's less painful because you never see that money unless you get a refund. But when you're a business, it's you got paid. Send that amount to the government. Keep what you had a month ago.
Wah wah. That sucks, dude.
All right. What else we got in here?
Let's see.
How do you recommend finding a trustworthy accountant? That's one.
That is a good one. I don't know. I would want to ask Johnny that.
Do you have an accountant, Andrew?
I actually don't have an accountant, and I'm kind of in the process of onboarding Johnny as my tax guy / accountant.
Oh, okay. So you were TurboTaxing it before.
I've TurboTaxed it all through whatever I guess 8 years I've been post college, and it hasn't been that bad. And I think they do a pretty good job of safeguarding you. I'm ridiculously ambitious. If I could write off my entire apartment, I would. But they kind of talk you down from the cliff, and they help guide you. So I think the most I ever wrote off was 25% or something.
Gotcha. I guess personally, I got a recommendation from a family member, and the family member is in the financial industry, and they are very good at their job, and they're also I just from what I know of this family member, they're a very trustworthy person, so I trusted the recommendation. I also like Googled the company that they recommended, and they had good reviews. So, I think if you get a good recommendation from somebody who knows what they're talking about, as like in addition to good Google reviews, then you're probably going to be fine.
It's like a special case because you kind of like knew someone, but
It's true. Yeah, it's hard
I
to find somebody
was
who you don't know.
I was looking for someone because I was like, LMM and whatever, and I maybe want to try and like, I always want to do like tricky stuff and like, oh, how can I save on taxes? But I talked with one guy, and he was gonna charge me an arm and a leg. And the thing is, like, I
Really?
didn't know if he was gonna do me any good. I feel like it's definitely tough, and maybe what you need to do is you just need to go and like sit down and talk with them. I'm sure they have like free consultations to, like on board you, and just kind of gauge like if it feels like they're making sense.
Yeah.
I don't know.
I think you can look at I think you can look at Yelp actually. And if not Yelp, like Angie's List is a good one. Um, let's see here. Let me look at. Oh, there's a place called the American Institute of Certified Public Accountants, and I believe that they have a directory. Yeah, it looks like it. Actually, Lifehacker has an article about this exact question. So I would say if you see a company that has a college student dancing on the sidewalk with a tax preparation sign, personally, I probably would not go to that place because that is what pizza places do.
So there is a question from Cody Connors,
Okay.
and so it's a tax question, but I'm like 99% sure that I know the answer to this. So
Oh,
his
okay,
question is, if I live 10 to 20 miles from work and commute back and forth every day, can I not deduct gas at all? In what case can a normal person deduct gas costs / transportation? So I'm pretty sure. You know what? Actually, I don't want to answer that question. I'm not confident enough.
You're not
Sorry.
confident in it?
No, I was like totally confident. I started reading it, and because I know that I was talking with Johnny, and I did a lot of traveling for LMM. I went to a few conferences and hotels, and paid for dinners and drinks with people who eventually sponsored the podcast, whatever, blah blah blah. And I can tell you what Johnny told me, but this applies from a business, like a side business sense. I don't believe it applies from like a normal job standpoint.
Yeah.
But there's a catch that I'll
So
put
I
in
can
this.
answer it now.
Which?
The question, the actual question.
The one that I'm like stumbling on right now?
Yes. So if you're driving from home to work as an employee, then
You
you cannot
Yeah.
deduct this. However, if you are driving from your place of work to another place of work, then you can deduct that.
So that was kind of what he told me, like where I could deduct like flights, right? I could write off the entire flight, but entertainment I can only write off like 50%.
Yeah, that's because meals and entertainment. Yeah, meals and entertainment as a category, you can only deduct 50%.
But the cool thing is so Cody, because obviously Cody. One sec, Johnny is back. Let me add him in.
Dude, I really wish I could post links in this. Like, there's got to be a way to do it.
We'll send something out, or we'll put it on like the page with all the questions.
Links to all these things.
Well, dude, so I see your question. I mean, I see your link. I don't know if everyone else.
I don't know if
does.
I don't know if everyone else can see it though. Like,
But real quick, so there's this thing. It's called transit checks, and there are all other companies that do it. But basically, you could take your money pre-tax and pay for transit. So my like subway like fare and path fare and stuff like that, I put into a card, and it's pre-tax, and then I can only buy mass transit stuff with it. So while you can't deduct the expense, like Thomas said, you could get like X% off, where X is your tax rate. So I'm taxed like 30+%. So technically I save 30 something percent on my travel to work because I'm using this like pre-tax benefit card. It has to be through your employer though. That's the thing.
okay.
Johnny,
Cool.
you there?
Yay. Yeah, well,
Sweet.
I'm here now, but I feel really bad and I'm sorry. I don't know what the fuck happened.
It's all right. Thomas entertained us. He told us stories. He. Anyways,
I
so
danced.
we
You
have.
missed a lot, Johnny.
Let's make let's make the most of their last 15 minutes here before they fucking shut us off and.
All right, we're gonna rapid fire these, Johnny.
We have a highly upvoted question here.
Yeah, I'm putting that in there. So, Johnny, my name is Brian, and I am inheriting a large sum of money this year. I understand that I won't have to pay taxes on this inheritance when I get it, but I am worried that investing in accounts that could make me eventually pay tax on the principal. What do I do?
So, I'm assuming it's just cash. Did it say? Is it an IRA? Is it?
Well, let's assume it's cash, and then maybe we could also say like if it changes slightly, if it's say like a bunch of Apple stock or something.
So, if it's so when you inherit something, you also inherit the basis of that item. So if you inherit a traditional IRA or something like that, then you kind of or you inherit a piece of property. You also inherit the basis that the person has. That's come. It's never kind of a good idea to put a piece of property, if you're going to will it to somebody, in their name before you actually die, because then when you put it in their name, then they inherit the kind of fair market basis. So if you bought it 100 years ago, then you want the 100-year ago basis. So so if it's really kind of hard to say. So if he inherits a large sum of cash and he's worried about the taxable aspect of it, I don't have the Q&A thing up. Hold on.
So I understand that I won't have to pay taxes on this inheritance when I get it, but I'm worried about investing it in accounts that could make me eventually pay taxes on the principal. So he's worried he's going to get the money, he's not going to pay taxes on it, but he's going to put it in Betterment, and it's going to grow. I mean, the thing is, like, once you have the money, if you weren't taxed on it, estate tax, whatever, once you invest it in Betterment and there are gains, when you sell it, like, you will get taxed on those gains, regardless.
Yeah. So Andrew, to be honest with you, I'm going to have to take this one back, and then we're going to have to shoot it to him in an email, because I honestly don't want to give him the wrong idea out there. So I'd have to go back and take a look, and we can email him the answer or find out. I mean, I don't know if he can email in, then I can get him an answer with an IRS regulation, because I definitely don't want to steer him wrong here.
Cool. All right, so let's keep going. He actually has another good one, but we just answered this, so we'll go to Michelle's real quick, because Thomas and I were kind of talking about it. Thomas and I were talking about it, not Michelle and I. How do you find a trustworthy accountant? Is there anything you recommend, something, like questions you could ask them to kind of like test their knowledge or their ability to think maybe outside of like super basics?
So since we're talking about taxes, I guess there's a few different levels of tax preparers, right? So there's kind of a CPA that everybody knows. There's also enrolled agents. There's like guys who are unenrolled or who have annual filing season program. Like, I wouldn't call them certificates, but it's kind of what they are, with certificates with the IRS. So you definitely want somebody with some sort of credentials. So an AFSP or an EA or some sort of CPA, some sort of credentials that way. There's also the IRS has a database of all enrolled tax preparers that kind of has we all get what's called a PTIN, preparer tax identification number, that says, hey, this guy is legit. He does everything that needed in order to get a PTIN. So when you're going through your accountant, you definitely want to make sure that they have some sort of credentials, or they're actually in the databases that on the IRS. But also, I mean, it's really going to come down to your comfort level, and just like any business relationship that you have with anybody, it's going to come to your comfort level, word of mouth, and then how much they actually know about.
Johnny, what do you think of fair prices?
You know what, Andrew? That's a great question, but I mean, it all just really depends. If you walk in there with one 1040 in one state, and I'm like, this is all I got, then I mean, $50, $75. I mean, it's kind of hard. Everybody puts a different price on their time.
So look,
So
like I know you do like a per form basis. So like you will charge them based on the amount of forms that you need to fill out. Is that a standard practice? Is that what people should look for? I mean, if they're gonna go to you and they're gonna say like I'm hourly, like is that just gonna be an exorbitant amount of money because they're just a slow typer? You know how
I mean, like, so yeah, that's kind of the industry norm that people use. They use a per form basis, and then those forms are, or the amounts of those forms are based on how long it kind of takes you in order to prepare that form. I mean, everybody's going to be different. Everybody's time's worth different to different people, different areas of the country. So, I mean, it can range anywhere from $50 to, if you have a really complex situation, hundreds and hundreds of dollars.
good deal. All right. There's one that was kind of down the bottom, but I wanted to answer. I thought it was pretty interesting. So, this is from Evan. So on TurboTax, when I'm putting in my W-2, it asks if a portion of the W-2 was paid family leave. My wife and I both took time off after the birth of my son. I had only 3 days paid leave, paid family leave. My wife had 3 months, but only vacation, sick and unpaid.
So I don't use TurboTax, so I don't know that specific thing. But any compensation that happens, so any taxable compensation is going to be encompassed within your W-2. I can see the question. My wife had 3 months. So my wife did the same thing when my um son was born here. We had kind of third-party sick pay leave. That's kind of like off of insurance. I'm not sure if that's what he's talking about, but there's actually a block checked on the W-2. There's 3 little boxes on there: retirement plan.
So
One of them is third-party sick pay. So I mean,
to
that
be
could
clear,
be it.
Johnny,
It's kind of just
like you would
Mhm.
only need to declare something if you got like say paid like you did from your insurance, like extra money, not from your job, right? Is that what you're kind of? So my understanding is there's two ways you can go
Well, I
about it,
mean,
right? You have your normal job, you get paid blah every month, and if they're gonna let you go 2 weeks to do the birth of your child, like great because you get paid X per month. It's almost like vacation days, right?
yeah. So I mean, it's all of your compensation is going to be encompassed in your W-2. There's not really any compensation that's not going to
So
be on there. Otherwise it's kind of non-taxable. It could be like reimbursement or something.
mm. Okay, and so the thing that you
So
were talking
I mean,
about with your insurance, because you said you were getting some kind of something from your insurance, was that above and beyond what you're getting paid from by your company?
right. So my wife, when she had the baby, she went on maternity leave, and we had short-term disability insurance for her that we paid for. So it covered a portion of her pay while she was out sick. So she didn't get paid by her company, but she got paid by the insurance company, which is a taxable entitlement. So we received a W-2 for it this year.
So that in that case, that would have to go under the paid family leave section.
Yeah, but there's not really a paid family leave section on your 1040.
Mm.
It's either income or not. So I mean, it might be why it's classified. I'm not sure why TurboTax is asking. They could be trying to steer them into some sort of, do you have expenses for a Schedule A type itemized deduction thing?
Mm.
I just don't know why it's asking that question.
I got you. All right.
So
The next one comes from our good friends for a very long time, the Dr. Daniel Merle. He asks, how does house foreclosure impact my taxes? I think it's an excellent question.
so he got foreclosed on a house. I mean, it all depends on whether the bank that forecloses his house is gonna forgive the loan or come after the loan. A cancellation of debt, they're gonna issue him a 1099-C to see, and then that could be income. I mean, I know they recently changed the laws to say before it wasn't income. I'm not sure. I think it was like 2010,
So,
I want to say, but now it is income, so they could issue that, and then I mean, you'd have to pay taxes on that because actually you're giving up the debt, and now it's considered income.
okay, so if I owed 100K on a home and my home was foreclosed on because I couldn't pay, and the bank forgave it. Took the home and forgave it. That would mean that I earned 100K, and I don't actually have to pay taxes to the government on like this quote unquote loan forgiveness.
Yeah, so you get a 1099-C that says that's income because, I mean, they just forgave, and the bank lost a bunch of money, so they just forgave that portion of the loan.
Mm. Huh. Is there a scenario where a foreclosure is not like an epic taxable event?
An epic taxable event.
I mean, like, okay, that's not the technical term. The technical term is not epic taxable. That was my ad-libbing this. I mean a very extreme or high taxable event.
I mean, anytime you win the lottery, you're going to pay a lot of taxes, right? I mean, but then you have a lot of money.
So basically, if you foreclose, like if something is forgiven, you're gonna get taxed on it. That's the gist.
Yeah, that's pretty much it. Just, I mean, if you take a lump sum out of your 401k, then I mean, there's a 10% penalty there, and then depending on the amount, that could be a significant taxable event.
All right. Can you talk about donations? How do we report about them? Which ones are qualified as tax deductible? Is there a limit for donations for a tax year? Which info/records do we need to save for potential IRS audit? And then thanks! Exclamation point.
So, so donations. So when you donate to a qualified person, so it has to be kind of a recognized, qualified charity. It can't just be like Andrew. No offense, Listen Money Matters isn't a qualified charity. So everybody, we appreciate the donations, everybody, but those are not. We can't write those off.
We run a shady shop over here.
It's not a shady shop. It's gifts. You have friends. You have lots and lots of friends, and those friends give you gifts, and that's okay, right, as long as they keep it under 14,000. So So if you do, you donate to your church, or you donate to your United Way or some other recognized organization, and you can deduct those on your Schedule A. So we before I got booted, we didn't really get into it, but the standard deduction care of itemized deduction. So if you itemize, then you can take that deduction for the deduction for the actual charitable contribution. If you don't, then you can't. And so it's really the records. If you have something, I would get a receipt anytime you pay anything in cash, or credit or some sort of receipt, only because you really want to substantiate anything for a potential IRS audit. But the rule is $250.
Cool. All right. So this one is from Brian again, and it's I quit my job to start my own business, and last year I lived on my savings. I sadly didn't make any income last year. I'm pretty sure that I still need to file, but would I only need to include my interest income?
So no income at all from any sources. We get no unemployment. I mean, it doesn't really say, but it just went to the top as soon as you put currently answered. So there are filing thresholds depending on if you there are filing thresholds based on whatever your I can't even speak right now. Your filing status is. So if you're married, I think it's around 20,000. I'd have to check. So if you're married, it's about 20,000. If you're single, it's a little less. So if you don't meet the income requirements of there, then I mean you wouldn't have to file.
So Johnny, if I'm married and I just decide to phone it in, I'm not even gonna claim unemployment. I'm just literally gonna phone it in. My interest is less than 20K. I don't even need to file.
No, I mean most people do file only because if they had a job and they made less than 20K, then there is probably some sort of withholding there. So I mean they'd probably want that withholding back, right? So I mean if you don't file, then you kind of don't get that withholding.
So what if he didn't make any income last year, but he made unemployment? Just as a hypothetical.
So I did see a question in there that talks about unemployment. Somebody asked if unemployment was taxable. Unemployment is taxable. You do have to report it on there. So the filing requirements for a single guy, I just looked it up, is 10,150. If you're under 65, which I'm assuming everybody in this podcast is, or webinar is, and then there's a bunch of different things. Married filing jointly with both spouses under 65, 20,300. So there are some filing requirements there. I mean, everybody's situation is different. You know, if you had a job, but if this guy's saying he didn't, then I mean, I guess it all depends. If he wants to take a loss and then carry that over from his business, I mean, that's all dependent.
I think people want me to talk more.
People want you to talk more?
Yeah,
Yes,
the problem is
do
a
it.
lot of these questions are like very much, I don't know, directed at people who are not 23-year-olds out of college.
So I'm curious, where do you see
Also,
this?
in full disclosure, and I should just let you guys know, so my girlfriend and my roommate decided to go to the store, and it's a snowstorm, and their car's broken. So I'm like also trying to teach them how to jump the car at the same time. So I'm sorry about that, but I don't want them to die in the storm. But no, I am looking at the questions, trying to figure out if I can add anything. But a lot of these I just don't know anything on.
Well, okay, I have a question for you, Thomas.
All right.
I see 3 guys and 1 cat.
Well, the cat just jumped off the chair. She's over here.
What is your answer?
Cat. My answer is cat.
Very nice.
She's like hanging out by the door right now. I don't even know what she's doing. Hey, you.
So and just to be clear, unemployment is taxable.
Yes.
All right. So, I see Gabrielle now. Can
Yeah, you
Thomas
see it?
talk more? This webinar needs more cat cuteness.
I've been like sitting here like I'm not talking very much. But I don't know what to say. Like this question, I've never even heard of it.
So I think we should go a little bit longer because there was a little bit of like technical difficulties. And if you have questions for Thomas, ask. Like he's the habit master. He's super productive. He's like 20-0 and makes quite a lot of money. So he knows like a few things. Like, I mean 1 or 2 things, but
I know one or two things.
All right, Johnny.
I'm
I'm
not
just
gonna
gonna keep.
23-year-old taxes.
There you go, Johnny. I'm just gonna keep like hitting it on you.
We can do that.
This is from Allison. And you better be careful because she actually knows quite a lot, so she may
Oh,
challenge
I know. I see her in Slack all the time,
you. So,
teaching me everything.
Allison says, if I fly to a town to look at a rental home,
There.
stayed with friends, their car. Oh, wait, let's see the cat.
Boop.
Show us the cat, Thomas.
I don't think she wants to be.
It's not the internet if there are not cats. All right. So if I fly to a town, look at rental homes, do inspections, etc., but I stay with friends and use their car to get around, can I include the flight cost as an expense on the property I eventually purchased during that trip?
So Allison is, I would say she's in the business of rental properties, right? I mean, that's
Right.
kind of what she does. I don't know. I mean, I haven't really talked to her in like that much that says, hey, if you do you have like an LLC or some sort of thing that manages all this? But I know she has quite a few because she's writing an epic article for us on it. So with that being said, I would venture to say any of the cost that she has associated with procuring a rental property, only because she's in that business, right? I mean, it's all gonna depend on on everybody's individual situation.
Like, it's justifiable because she makes like actual legit income doing it. So that's how she can justify it, right?
Yeah, I mean, I would definitely say so. So, I mean, like I said, I haven't really talked to her. I don't know, but I know for a fact that she's in that business because she had like 7 or 8 rental properties from what I learned about in Slack.
So your answer is yes.
My answer
Well, it
is-
sounds like you could
my
reword
tentative
the
answer is
question.
yes.
Like you could reword the question to, I slept on the street and walked to the properties. Like still, the flight is a business cost, regardless of how you accommodated yourself or got yourself around in town. Like, if that's your business, then the flight would be the business cost, like a travel cost, right?
Yeah, because she's not going there she's going there for business, and it just so happens that she's there with her friends or staying with her friends. So.
Cool. So Thomas,
Yeah.
is there a Listen Money Matters guild in Habit RPG?
There is not currently a Listen Money Matters guild. Andrew, if you get into it enough that you want to make one, then go ahead. However, there is a College Info Geek guild, and we have about 180 members now.
And there are quite a few Listen Money Matters people in there. I
There
have
are.
joined.
There's actually people in there like
certainly-
asking me questions about LMM. So
In there?
yeah, I'm gonna say for the time, like, yeah. Oh, whoa, I just got a question the other day. They want us to pick the habit thing back up.
Mm.
Because I think we like dropped it because a few people were like, do more money
Like,
episodes.
more money topics. I'm like, all right, chill. Like, wow. I thought it was
So-
cool.
Yeah, I think we have some topics to talk about when it comes to habits. But yes, if you are part of the LMM community, I would say right now the best thing to do if you're on Habit RPG is to get into the College Info Geek Guild. We reserve the right to build another one at some point. But I think Andrew's pulling his hair out enough with like redesign stuff and all that. So yeah.
I've got my work cut out for me, yeah.
join the CIG Guild, collegeinfogeek.com/guild, and if you have LMM questions, I will answer them in there or relay them to Andrew.
Plus, if you want to join a guild based on habits, it would not yet be my guild that you would want to join. You would want to join a guild that was run by Thomas. If you want a guild on bad habits, I could run that one.
My girlfriend is like now making fun of me on a daily basis every time I say the word habit because apparently I say it too much.
All right.
But yeah, that was easy. Give me more easy questions.
More easy.
Showing cats. That's the easiest answer.
All right. I have another one for Johnny.
Okay.
Johnny. And then this is from Timothy. Timothy, by the way. I currently made a mistake on my 2013 Schedule C and now have $8,500 worth of equipment purchases I listed on my inventory line. How do I correct this error, and what is the appropriate way to write off these types of equipment purchases?
So did he say he spent $8,500 in equipment?
Yeah, so he made a mistake on his 2013 Schedule C.
Yeah.
Yeah.
Okay, so if he actually purchased the equipment in 13, then I would definitely amend his 13 return. So do a 1040X or have your accountant, or I think TurboTax does them. I don't know. So a 1040X is an actual amendment on there. So and so you'd actually either expense the equipment on there, or you would depreciate it depending on if you fell within the rules of, if you've already took your Schedule 179 depreciation or your bonus depreciation, or I mean, so I guess it depends on where his business at. If this is just like a little piece of equipment on there, if it's extreme business thing, but I mean, definitely amend it. Use an accountant if you're not sure. TurboTax is there. They could probably walk you through on how to amend it originally, how you did it, but depreciate it or expense it all in the same year if you're able to. I guess that's kind of the gist of the answer.
Cool. All right, just gonna keep.
Ransom.
What?
I feel you, man.
What do you say?
His girlfriend makes fun of him for the same things. I feel like my girlfriend is going to benefit from the habit stuff. So in some way.
In due time. You're saying in like 5 years she'll be like, Thomas, thank you for all
dude,
the
I got her
annoying
on
shit.
Habit RPG. She's on it.
What level is she?
She's like, I think she's like 3 or 4. She doesn't have a whole lot in there, so she keeps complaining to me about like how it's taken her a long time to level up. And I'm like, add more stuff. I put like my workout stuff in there, so if I do a set of squats, I get points for it. And we just went to the gym, so I think she's gonna get a couple levels.
And what level are you?
60.
That's
I've been
it?
playing for a long time. Well, I mean, you played RPGs, Andrew. You know, as you go
Oh,
up in
yeah.
levels, you need more EXP.
Yeah, I played WoW, and then I was there when you capped at 60, and you still played anyways, and you're just go and kill the
My
newbies.
roommate is currently playing WoW right now. I can hear him yelling.
Oh my god, that was a disease that I cured myself of. It was good though. I love it. All right, Johnny. Any way to deduct or save on a new car purchase?
So usually new car purchases, they come with personal property tax that comes with your registration. So personal property tax can be deducted on your Schedule A. So it's kind of separate from the actual registration piece of it. I don't know, North Carolina, where I'm at, I paid like, I don't know, like $150 in tax based on the value of the car that I registered. So if I were to itemize, which I don't personally, but if you were to itemize, you can deduct that piece of property tax on your Schedule A.
Cool. So this one sounds slightly challenging. It's from Brandon. Could you explain the safe harbor provision to avoid under withholding penalties? I feel like now, like those are just like all keywords, just kind of like exactly. And thank you. We don't have time to answer anymore.
So I don't know if he's talking about this new kind of thing that's going around in the tax world right now, when you buy like have repairs and equipment, and there's this form 3115. I don't know if he's talking about that, or if he's just kind of used the same, by coincidence, used the same terminology as the what that form kind of, that kind of subject matter, what it's going. But I mean, I guess it all depends. If you don't want to. So the IRS here in the tax code here is kind of a pay-as-you-go system, right? So you don't pay, either you pay quarterly or you pay monthly if you have a job, but at the end of the day, you kind of have to pay. So if you don't pay within 100% of last year's tax or 90% of this year's tax, you're going to get hit with an underpayment penalty. So I mean, do your due diligence, know what you paid last year, know what you paid this year. If he's talking about the other thing, that's kind of a side conversation that we'd have to have, because it's going to go way over the crowd here. So is that Brandon?
Yeah.
Yeah, Brandon, if you're talking about that other thing, send an email out, and you can have a side chat on it.
All right. I have a tough one for you, dude. Can you get a tax deduction from WoW playing time?
Is WoW so I've never played. That's World of Warcraft, right?
Yeah.
Is that your job?
If you're a gold farmer.
There you go.
I don't know what a gold farmer is.
You farm gold in the game, and then you sell it for real money.
I don't know. I mean,
and if you do that, you do not make a real living wage.
That's true. And I actually think it's illegal. Like, you're not allowed to do that. It's against the POS.
I don't know. I can't help you there. I've never played WoW. I mean, I'm pretty sure if we brainstormed it, we can probably figure something out. But
I think you should have a tax penalty for WoW playing time.
Dude, I had like 40-something days.
Because you're not contributing to society.
Yeah, remember when Google made their logo like Pac-Man, and then they did those calculations about how much it costs the U.S. economy?
Yeah, how much was that?
Based on how many hours during peak work hours that it was played. It was like $400 million or something like that. I don't know. It was a lot.
That's Johnny, this is from Tamara.
Yes.
What would be the max number of allowances for a single taxpayer making 48, and there are 4 zeros following it, so I'm just going to say 48,000 million. No, 48,000. That would allow me to. So, what is the max number of allowances for a single taxpayer making $48,000 that will allow me to break even in taxes? What about when I'm married with combined income of 100,000?
So
that was
there's
over my head completely.
Yeah. So I guess what she's talking about is she's talking about her W-4. So her W-4 at work is going to say, hey, I'm single or married, and I claim this many of allowances, and then based on that, the IRS does some magic calculation based on how much you get paid. It's not really magic. There's a chart that they use pretty much, but and then from there it kind of goes into this is how much can taken out of your pay. Right, so that's one entity, and then they use the amount taken out of your pay in order to calculate how much taxes you paid. But there's so many different avenues, kind of what we touched about here. I mean, do you itemize? Do you not itemize? Do you have student loan interest? Do you, yeah, I have your income now, but without, the other 25 aspects of it, it's really hard to say. But I mean, the IRS has a great calculator. I know Candace linked it to it in the show notes when we did the Taxes 101 episode on there, so you can use that to kind of justify it. If you really want to get nerdy, there's a pub. I think it's Pub 15 Circular E, if I'm not mistaken, on the IRS website. You can Google it, and that'll give you a chart basically that says if you get paid monthly, weekly, daily, how much you get paid based on the number of ounces. This is how much is going to come out of your check. So it gets really nerdy really fast, but use one of those two aspects of it, and you'll be okay.
Cool. All right, so two more.
All right, I'm in.
Yeah, two more, and then we're nipping it, and everyone's gonna have to bug you.
Can we copy them, and then I can just I don't know, put it like a spot on the Facebook thing, or like a Word document or something on Facebook that says, hey, these are all the unanswered questions.
Yeah, dude, we'll figure that out. So we'll
Okay.
answer the rest off the air. So, next one is from Mr. Daniel Murrow, and it is, how do you find the value of non-cash charitable contributions?
Oh,
That's a good one too.
that's a good one.
Yeah.
So like food drive donations maybe, or like
Daniel came prepared, man. Shit.
This dude, oh man. So it's basically
He's testing you,
the
man.
yeah. So it's when you like if you're gonna give somebody a car, right, or if you're gonna give a charitable contribution a car, you're gonna give them something. It's based on the fair market value of what you can get for it. It's not kind of, and so what? Well, how do we get that? Well, I mean, if you were gonna sell it to somebody, how much could you realistically get for it? Because when you take a car to the Goodwill or whatever, they're gonna be like, oh, how much did you pay for it? Okay, because they don't care.
Right.
So I mean the fair market value, or I mean if they're in turn sell it, then whatever they got for it is kind of what you can write off. So I mean I guess it all
So,
depends on how you
if I had,
consider
like,
how to kind of fair market.
If I had like a stack of T-shirts in my garage, and I'm just like, I can't anymore, and I just like put them in the dare bin or whatever, I have to be like honest-ish in what the number will be. Like, so if I like donate 20 shirts and I want to write off like $10,000, but I might be able to get away with like $100.
Maybe those were like one of your long lost shirts that you wore, and now you're a famous podcaster, so it could very well be worth $10,000.
Legitimate pit-stained shirts with Andrew Musk.
Yeah, so I mean, what's the fair market value of a T-shirt? I don't know, a couple dollars. I couldn't tell you.
Speak for yourself. Mine's only the fanciest cloth. All right, last one, and then.
Oh, here we go. Determining the value of donated property for any contribution of $250 or more. You must obtain and keep in your records a contemporaneous written acknowledgement from the qualified organization indicating the amount of cash and a description of the property contributed. I think you have to get a thing.
It's like a receipt or something, or
like a document, like a good faith estimate of the value of that. So if you're gonna give a card to a thing, you need to get like a document, basically.
So when we answer the question about charitable contributions, I mean the $250 cap still not cap, the $250 limit to get the paper still applies. I mean you definitely need proof. You can't just be like, oh, I gave him a car and it was worth $100,000 when it was an old clunker that's been sitting in your garage for 20 years.
Yeah.
So okay, one last question, but I do want to read one thing real quick. And this it's not like a question, but it's from Terry. She says, "Oh shit, it just moved down. Where the fuck?"
The one that says,
I just have a question, Johnny. How do you keep all this information in your head? Thank you for offering all this free of charge.
He's secretly a robot.
And he left. He didn't even want to hear it. You scared him away, Terry.
Turns out he's a robot, and you didn't count him. So.
Look, I believe Johnny's internet broke again. We're gonna try and get him paid a living wage so he can afford. Wait, here he is. One sec.
You back?
Johnny. Wait for it.
Their car is still stuck on the highway.
That sucks, dude.
I think my roommate is out there trying to save them, get it jumped or something with it.
But there, like, no one lives in Iowa, right? So, like, the chance of a car driving by is almost impossible.
Yeah, like I'm actually in my zombie bunker right now. Like I don't even know why they have a car. You know,
Dude, that's a
we just
sweet
have
looking zombie bunker.
we have a commune. My computer is running off of potato electricity, actually,
All right.
and
So,
hamsters.
Johnny lives in North Carolina, and apparently they almost don't have internet there. But we're gonna call it. There's a few more questions that Johnny will answer, and we'll put them up somewhere that you'll be able to find them. Everyone, thank you for coming. This was super fun. I think we peaked at like 35 people, and it was cool. It was fun. Basically doing what we always do, but now you're like looking at us like unshaven and dirty.
Wait, who's unshaven and dirty? You? Me?
I was gonna
This is
say,
my natural look.
me too.
Okay, I'm dirty. I came straight from the gym to this.
That's why I keep my
Sacrifices
hair
I make
short.
for you people.
Did I wash my hair? Did I not? Who knows? I don't know. But everyone, thank you for coming. This was awesome. We will do more, and yeah.
With better technology. Or at least
Alright.
preparation.
Later,
Maybe we'll have like, yeah, later, man.